Welcome to Talking Money with Nozi, Personal Finance Made Simple. Today, I'm going to be talking about how to invest in ETFs or index funds in 5 easy steps. Firstly, what is a market index? An index is a group of many different shares of companies which are on the stock market. The shares that belong to an index are grouped according to a particular theme. So for example, there is an index of the largest technology stocks. There's an index of the largest companies on the stock market overall. There's an index of medium-sized companies, an index of small companies. There's an index of property companies, an index of dividend-paying companies. There are country-specific indexes which cover shares of companies in a specific country, and there are also global indexes which cover shares of companies from different countries. Basically, there's an index of just about anything that is on the stock market. Some examples of indexes are the S&P 500 index. This index is made up of a group of America's 500 largest companies. There's the FTSE 100 index. This index is made up of the United Kingdom's 100 largest companies. There's the JSE Top 40 index. This index is made up of South Africa's 40 largest companies. The ASX 200 index is made up of Australia's 200 largest companies. The German DAX index is made up of Germany's 40 largest companies. The Nikkei 225 index is made up of Japan's 225 largest companies. The Hang Seng index is made up of China's 64 largest companies. Now that I have explained what indexes are, what is an index fund? Well, the best way that I can explain an index fund is that you cannot invest in an index directly. So how then can you invest in an index like the S&P 500 or the JSE Top 40, for example? You do that by buying an index fund on the stock market. An index fund is a product which has shares that are part of an index. For example, the S&P 500 Exchange Traded Fund or ETF has shares that are in the S&P 500 index. The JSE Top 40 Exchange Traded Fund has shares that are in the Top 40 index. Basically, when you buy an index fund, like an exchange traded fund, your cash is then used to invest in all the companies that make up the index. Some of you have seen this website before. This is my absolute go-to when it comes to ETFs, which are on the JSE. The name of the website is ETFSA. It shows you all of our JSE listed ETFs. And what you'll notice on the website, it will show you the provider of the ETF name, the region, whether it's a domestic ETF, meaning it's South African ETF, or foreign, meaning overseas ETF. Then most importantly, it shows you the index tracked. Also, it shows you the TER, which is the cost of owning the ETF, as well as the fact sheet. So what I want to show you is the Core Shares Total World ETF. So here's the name, Core Shares Total World. The index is the FTSE Global All Cap Index. Let's have a look at the fact sheet. So I'm going to click on view right here. Let me blow this up so that you can see. Here is the objective. The Core Shares Total World Stock Feeder Exchange Traded Fund is a feeder fund, and it seeks to track the FTSE Global All Cap Index. Remember, I said you cannot buy an index directly. You buy a fund, an ETF, which tracks that particular index. It says this index covers both well-established and still developing markets. The investment objective of the fund is to provide income to investors and capital growth over the long term. So what you do if you want to see what this index is about, Google is your friend. Literally, guys, copy the name of the index. Then we're going to go and Google that index. So let me see what comes up. So here we go, FTSE Global All Cap Index. You can actually download that PDF and see what it's all about. Let's have a look. Here's what the PDF says. FTSE Global All Cap Index is a market capitalization weighted index representing performance of the large, mid, and small cap stocks globally. The index covers developed and emerging markets and is suitable as the basis for investment products such as funds, derivatives, and exchange traded funds. You can also see the 5-year performance in a graphic format. You can also see the performance in a table format. Also, you're going to see the country breakdown. So the number of countries is 49 countries. the number of shares is 9,380. Then you can see the country, the number of shares. So you've got Australia with 304 shares, China with 1,658 shares. That's a lot, right? Japan, 1,395 shares. Let's go down. You see South Africa, 96 shares represented in this index. Then also have USA with the highest, 1,827 shares represented. Then also you see the top 10 constituents. There's no surprise here, guys. USA takes the cup. These are the top 10 companies in this index. And then lastly, guys, what you see here is the industry breakdown in terms of those companies. To which industry do they belong to? You can see that technology makes up the highest weighting, and then followed by consumer discretionary, then followed by financials, then followed by industrials, then healthcare, etc. Let's go back. What about Satrix 40? The index is the JSE Top 40. So let's have a look at the fact sheet. So view there. Let's blow this up. It says the mandate of the Satrix 40 ETF is to track as closely as possible the value of the FTSE JSE Top 40 index. Satrix 40, the fund, is tracking the index, which is the JSE Top 40 index. And again, simply go and Google and say JSE Top 40 index to see which companies are in the top 40. So let me click on here. South Africa Top 40 constituents, they are listed down here. You can see ABSA alphabetically going down like that, with the last one being Woolworths. And then an interesting thing, I love this website, it's actually showing you major world indices. So the proper way to pronounce an index in plural, more than one, is not indexes, it's indices. So here it's showing you South African Top 40, it's showing you whether it's gone up or down for the day. The Dow Jones index is America's 30 largest companies, so it's gone down. The S&P 500 index, which is America's 500 largest companies, it has gone down. The DAX, that's the German index, which I mentioned, it's down. We've got the FTSE 100, which is the London Stock Exchange index of the 100 largest companies there, it's down. And then the Hang Seng, which is 64 of China's largest companies, is currently down. So guys, now you understand, whenever you see these indices, whenever you hear it being reported on the news, you're no longer clueless, you know exactly what they're talking about, right? Lastly, let's look at one of my favorite ETFs, the Signia S&P 500. The index that it tracks is the S&P 500 index. Let's view the fact sheet and see what's going on in there. Let me blow it up. You can see here it says investment objective to replicate the price and yield performance of the S&P 500 index. If I want to see what's going on with that index, I just simply copy and paste into Google. So I Googled S&P 500 holdings, and the link which pops up is perfectly fine, that first link, so you can click on it to see what constituents or what companies make up the S&P 500 index. So company number one on this index is Apple, then Microsoft, Amazon, Tesla, then Google Class A and C shares, then Berkshire Hathaway, United Health Group, Johnson & Johnson, Nvidia, ExxonMobil, Facebook, Procter & Gamble, Visa, JP Morgan and Chase, etc. Right to the bottom up to, let's keep scrolling here, let's keep scrolling, let's keep scrolling, let's keep scrolling, up to 504 companies. What you see here where it says weight, that's the percentage of the company within the index. So Apple has the highest percentage in the index. Investing in index funds like ETFs gives you more diversification than if you were buying individual shares. This has got a lot of advantages that I mentioned in another video. After this video, please watch my video titled "Should you invest in individual shares or ETFs?" The thumbnail for that video is going to pop up at the end of this video. All you need to do is to click on it to watch the video. So how do you invest in exchange traded funds, or ETFs for short? Step number one, you need to find an affordable investing app. One example of an affordable app for people in South Africa, Namibia, Lesotho, and Eswatini is Easy Equities. And guys, remember, I mentioned it in one of my videos. Easy Equities is not the only investing app in the world. You can still invest on the stock market using investing apps from your country or international investing apps, which allow people from any country to invest. For example, in America, the popular investing apps are M1 Finance, Betterment, Investment, Acorns, Wealthfront, Fidelity, Schwab, Vanguard. This is for people who live in America. In the UK, the popular investing apps are DeGiro, Freetrade, Stake, Invest Engine, IG, Vanguard. In Australia, the popular investing apps are CommSec, Westpac, Self-Worth, Perla, ANZ, Stake, IG, NAB, Vanguard. And lastly, the most popular investing app for anyone who lives in any part of the world is Interactive Brokers. The rule for finding an investing app is that you should look for investing apps that don't charge commissions when you buy shares or ETFs, apps that don't have high minimum deposit requirements, and investing apps that offer a variety of ETFs and shares to choose from. Do your research, read online reviews, and go to each website to get as much information as possible before you decide which one to use. Step number 2, open an investing account with your chosen app or website. You're going to do the registration online. The process should be fairly easy. If you can figure out how to sign up for TikTok and Twitter and Instagram, then you'll be fine. You will definitely know how to sign up for investing. For example, with Easy Equities, you go to easyequities.co.za, click on register, fill in all the required information, and it'll take a day or two for your account to be ready. Step 3, choose which index fund you want to invest in. This is the fun part, right? Generally, it is better to stick with a few ETFs because remember, diversification is built into the fund already, and it is not a good idea to over diversify by buying too many ETFs. So which ETFs should you start with? Well, the concept of ETF investing is the same regardless of where you live. Concept number 1 of investing in ETFs: buy an ETF which represents most of the companies on your local market. If you live in the UK, such an ETF would be the FTSE 100 ETF, which is a group of the largest 100 companies on the London Stock Exchange. If you live in Australia, such an ETF would be the Australian Shares Index ETF, which is a group of the 300 largest companies on the Australian Stock Exchange. If you live in South Africa, such an ETF would be the Top 40 ETF, which is a group of South Africa's 40 largest companies. If you live in America, such an ETF would be the S&P 500, which is a group of the 500 largest companies on the American stock market. You get the idea. The second concept when it comes to investing in ETFs is that you should buy a globally diversified ETF, which covers companies from many countries all over the world. In South Africa, examples of globally diversified ETFs are the F&B Global 1200, the Cautious Total World, Satrix MSCI World. In other parts of the world, like America, the UK, or Australia, etc., an example of a globally diversified ETF would be the Vanguard Total World Index ETF. The reason for buying a global ETF is because you need to have investments outside of your country. A lot of investors have got a home bias where they invest all or most of their money into their own country. What happens if something bad happens to your country's economy? You need to diversify and have international investments to reduce your risk. These two concepts are enough. That's your foundation. One diverse ETF which represents your local market, and another diverse ETF which represents the entire world. And then you can build from there. If you like, you can add other ETFs on top of that, but those two are your foundation, right? Step number 4, deposit money into your investing account and buy your chosen ETFs. If you are in South Africa and you invest 500 Rand per month, for example, you can split your money in half and use 250 to buy the top 40 and use the other 250 to buy a global ETF. Personally, I prefer buying my ETFs inside of my Easy Equities tax-free savings account, my TFSA, because of the tax benefits. If you have the Easy Equities app, but you don't know how to deposit money and how to buy shares or ETFs, just click on the link which is appearing on your screen right now to watch the video where I show you how to use the Easy Equities app. Step 5 is to keep adding money and buying the same ETFs every month or as often as you want for the long term. If you earn any dividends, you should reinvest those dividends by buying the same ETFs. If you keep buying the same ETFs every month and reinvesting all the dividends that you earn, your investments are going to compound in growth over the years because the value of the ETFs will go up and your dividend payments will keep growing larger and larger and larger. That's it, guys. Those were the 5 easy steps of investing in ETFs. Investing is not hard at all. The key is discipline and patience. Stick with your plan long enough and you will see amazing results. Can you become rich by investing in ETFs? Absolutely yes. But it's not going to happen overnight. It takes many years. So when you get your salary every month, invest first. When you get your annual bonus, invest a chunk of it first. When you get a refund from SARS, invest it. When you get a salary increase, increase your investment amount. You're going to thank yourself later. Just watch this next video where I talk about compound interest so that you can understand how allowing your investments to compound over the long term can make you a millionaire. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. I'm going to see you in the next one. Bye, guys.